what's up guys, it's Jonathan here. So on Monday, we saw the stock market drop pretty significantly for the day. And this is mostly due to what's happening to the Chinese real estate developer Evergrande. So in this video, we're going to discuss how Evergrande is affecting the US stock market, two other major catalysts that are causing the market to move downwards as well, and how I plan to invest in this market. So if this video provides you any value, please consider hitting the like and subscribe button down below. It greatly helps out the channel, helps push this video out to as many people as possible. So let's get right into the video. So Evergrande is the second biggest home builder in China. And over the years, this company has grown exponentially. Between the years of 2017 and now, this company has doubled their revenues. Like most real estate developers and investors, Evergrande doesn't use their own money to develop these properties, but instead they use other people's money. So to fuel the rapid growth, they took out a lot of debt so they could build more homes. And when it comes to debt, taking on more debt is okay as long as you have the money to service the debt. But when supply shortages affected the real estate markets throughout the globe, it also affected Evergrande's ability to complete their developments. Because Evergrande was not able to complete their developments, a lot of inventory started to pile up. But at the same time as this inventory was piling up, Evergrande's debt payments were becoming due, and the company started to run out of cash to service this debt. It even got so bad to where the company was actually asking employees to borrow money to companies so they could service their debt. And at first, the company was able to pay back their employees. But just this month, they stopped paying their employees because they're out of cash. And let me remind you that there's employees who borrowed money from their family to borrow to the company. So this is a really nasty situation. And for Evergrande, they have another $83 million interest payment that they have to service on Thursday. And with virtually zero cash left in this business, there's a pretty good chance that they're going to end up defaulting on their loans. So you're probably thinking, how does this affect me if I don't live in China? Evergrande's bondholders are scattered across the globe. And if they default on their loan obligation, it could leave investors throughout the world left holding the bag on Evergrande's debt of about $300 billion. And another reason that this could affect the market is that a lot of local Chinese banks has also extended debt to not only Evergrande, also their vendors and their suppliers. So if Evergrande's not able to service their debt, they probably don't have any money to pay their vendors or suppliers, which means that their vendors and suppliers will also have to default on their loans to the bank as well. So to put this into comparison, this can be almost the equivalent of China's 2008 housing bubble. And the Evergrande crisis isn't the only situation that's affecting the markets right now. Currently, the United States government is less than 2 weeks away from hitting the debt ceiling. And basically what the debt ceiling is, that's the maximum that the US federal government can borrow. So once the government hits that ceiling, they can't borrow any more money, which means that they can't service their debt. The country will actually default on their loan. And you may not think that this is terrible for the average investor, but actually it could be very bad. It could cause an unexpected spike in interest rates, and we all know how much interest rates control everything in our economy. So if interest rates were to jump, we could see asset prices fall pretty significantly. Given that Congress only has 2 weeks to act not only on raising the debt ceiling, but also passing a budget for the next fiscal year, we could not only have a government shutdown, but also be in a place the federal government can't even service their own debt. Also this week, Federal Reserve Chairman Jerome Powell will announce that the Fed will begin tapering or reducing the amount of bond purchases they make this month. Given the inflection towards the downside in inflation and the high unemployment rates we have currently, this is most likely not to happen. But it's something that you should be aware of, because if it was to happen, we would see a pretty significant drawback in the market as well. So here's my take on everything in terms of an investing standpoint. The price action that we saw on Monday in the market, I think we're going to continue to see that for the next couple of weeks as these free catalysts start to play out more in the market. And when it comes to this, I think that there's kind of different levels of how stocks are going to respond. So I think first and foremost, the Chinese stocks are going to get hit super hard with this. And the reason for that thinking is that the Evergrande situation could be a huge catalyst for the Chinese government to crack down even further on corporations, which will only cause the price of Chinese stocks to fall even further. Given that, and also the delisting risk of Chinese stocks, I'm not really a big fan of touching anything Chinese related. I'm not going to sell out the positions that I have, but I don't think I'm going to add to it during this downfall. But I think that there's more opportunity in the higher valuation growth stocks. I think value will move to the downside, but not as much as the high PE growth stocks. So for me, I think that this dip that we saw on Monday will continue to see more of a dip as the week moves on. So basically what I'm doing is that for Tuesday and Wednesday, if I see any dips, I'm looking to deploy about 5 to 10% of my cash. And then if we start to see bigger dips later on in the week or even into next week, I'll be more open to deploying more of my cash down that road. I also think that there will be some good opportunities to buy the dip in crypto as well. So I'm not only looking at those stocks, but I'm also looking at the cryptocurrency market as well. Also, if you're interested in seeing any of the stocks that I plan to buy, check out my link down below for M1 Finance. So thank you for watching. If you enjoyed this video, please hit the like button for YouTube algorithm. It greatly helps out the channel and helps push this video out to as many people as possible. Also, if you like my perspectives and the way I explain things, consider hitting the subscribe button and notification bell so you can get notified anytime I post a new video. Also, I'd love to hear from you guys. How do you think the next couple of weeks are going to play out? Let me know in the comment section down below. Also, follow me on all my social medias. I try to post there every day. And thank you so much for watching, and I'll see you in the next video.